Hey Pedro, thank you. Super glad to be here. I'm Chief Product Manager in Residence here in Canopy Coaching, and my background is in product management, obviously, and before that, software engineering. So I like to say I'm kind of bridging the gap between the business and the tech when startups are preparing for the launch.
Great, thank you. Rachel Sestini, who is Rachel?
So I'm the CFO in Residence. I run a tax and accountancy business and a pensions business. So very much the all about the numbers person. And I've done that on the back of a career at a big accountancy firm and a few other different jobs. Yeah, I'm sitting here today as a business founder, as well as someone who quite likes the numbers around businesses.
The lady taking care of money, which is great. Nick Eversett, hello, and nice to see you again. How are you?
Hello, thank you, Pedro. Well, it's great to be here with everyone today. Yeah, I'm the CMO in Residence, and I run my own marketing consultancy as well as working with a number of different businesses. My background originally is in financial services, but more recently I've been working with digital businesses, particularly in the tech area. So yeah, great to be here.
Great. Yana Garos, please introduce yourself. Hi.
Hello, lovely to see you all. So my name is Yana and I'm the COO in Residence. So I started several businesses and I'm currently leading a IT consultancy firm in London. So very happy to be with you all today and contribute to any of the topics that we will be exploring. Over to you, Pedro.
Super.
Thank you.
Thank you. While Elga is still connecting herself, are you with us already, or are you still doing the funny stuff? Okay.
I'm coming. I'm coming.
Hello.
Good afternoon,
Hello.
everyone.
Hello, Helga. We are just introducing ourselves, so to those who don't know who is Helga Saraiva Stewart. No, she's still connected now.
No, I'm here. Problems with my audio and video. So sorry, were you wanting me to do a very quick introduction?
Exactly, we're just introducing ourselves.
Okay, so I'm Elga Saraiva Stewart. I'm founder of Lead Results and Sales Shaker. We are a boutique consulting company that's specialist in B2B selling and prospecting. And we are working with sales leaders and entrepreneurs who want to innovate their prospecting best practices and want to raise strategic clients and close more sales and really take their prospecting activity to the next level. I'm also founder of Sales Shaker, which is an event about the future and innovation in B2B selling. So very exciting stuff.
Awesome.
Thank you.
And being the CEO in Residence, it's my pleasure and honor to hand over the leadership of this conversation to our chairman in Residence, Stuart.
Oh, good God, if I'm in charge, we really are in trouble. Sorry about that, everybody. Great to have you here today, and I hope everybody's watching the live stream can get something from today. Of course, if you've got questions that you want to send to us, you can email me, you can stick them in the Tribe WhatsApp chat, you can send them through the Facebook chat as well, and we can just try and answer them. But of course, we got some questions up front from people. So Rachel, you're up first with this one, right? So it's our old friend. The question's been coming very regularly over the last couple of weeks. What the heck are unit economics? I've heard that like 5 or 6 times just in the last couple of days. Early stage founders really questioning, like, what are unit economics? How do they present them to people? What sort of things should they be thinking about? So any thoughts you want to give that one, and then we'll open it up wider?
Yeah, absolutely. I'm sure a lot of people have got an opinion on this. It does seem to be one of the flavors of the month at the moment, but at a basic level, unit economics is really just about understanding how much money you are making or are likely to make from your offering, whether it's a service or a product. It's relatively easy if you think about selling something like a pen or a notepad. You can buy it from the wholesaler at $1, you can sell it at $10. On the surface, you feel as though you've made $9 profit. But then you do have to think about the other costs. So unit economics is really a systemized way of helping you break down and take account of all the different costs that go to getting the point that you can sell that notebook. So it's the looking at the different notebook providers, the people who you need to assess what's available, the distribution, how are you going to advertise to your audience? So it's actually looking at all those different costs that go to the point that you actually have something which you sell to the customer. And then, you know, how much are you actually going to get? So it becomes, in some ways, more interesting when you're looking at a service, because you're not potentially going for a one-off sale to somebody and then they disappear forever. You're actually looking at getting the buy-in of a customer over maybe years, even decades. I mentioned briefly, I have a pensions business. You know, we're looking at taking on customers who could well, they and their families might be with us for hopefully, you know, 50, 100 years, who knows. So it's a way of looking at that lifetime journey with the customer, from the initial cost of acquisition and then the likely journey each different type of customer is going to go on with you, what that means in terms of the potential revenue value. And yeah, so you have a system to go through of looking at all the different factors that influence, the different levers that influence the actual cost and revenue you're going to get per customer. Sorry, that's me on Unit Economics 101. I think it's a good point to open it up.
Thank you for that, Rachel. All right, Nick Eversett, you're the CMO in residence. What's your perspective on unit economics? Any thoughts?
Yeah, I mean, I've come across it quite a lot when working with clients with SaaS businesses, where you're actually looking. Well, you can focus very much in on the product development side of things, but actually where it becomes quite tricky is when you're starting to actually build in your actually marketing and sales costs on top. One of the areas that people get very tripped up on is actually thinking their product can be a no-touch sales product. That in their minds, all they have to do is they call it this Monday.com or whatever, and all you do is you advertise a bit and people will just buy your product. Unfortunately, for a lot of products, there is a lot of sales hand-holding and post-sales onboarding, and you need to kind of break that down into how many sales can a salesman make, how many is he going to, how many people is he going to talk to, how many demos is he going to, or she doing, or how many people can he or she convert, and then post sale you're breaking that down again to see, well, how many people do you need to actually service a particular stage in the process, and what you find actually when you add this up is you can find that your cost can go up exponentially, and you have to then feed that back into your pricing.
Okay, thanks for that, Nick. What about you, Pedro? What do you think about unit economics, and why do you think they're important? Why do people keep asking for them?
I think it's great for people to be concerned about understanding costs and understanding all. Sometimes we tend to focus ourselves more on the selling price more than actually having a clear understanding of everything that is related. Of course, there are many ways of building a pricing strategy, but I think people are trying to understand if they're not missing something. I'm trying to understand why are they asking so many times about this, and there are always some pitfalls. So probably I think that's the need, and I agree with that, the need to have the best control possible on all variables prior to actually do something, or at least to establish a final price. So I think it starts from there.
Okay, thank you for that. Now, Tiana, you're a product manager and a product owner. Like, the unit economics feature in your world? Have you got any perspective here?
Actually, it's a good part of scoping the MVP. We are trying to make it as minimal as possible, also in order to decrease the costs of developing the MVP. So I guess it is important for us, the cost part. And then later on, when thinking about sales, yes, the way we try to understand the revenue models, pricing plans that we are offering to the customers, we have to take into account the cost we had and for developing the MVP, and how soon we really need to start making this income in order for everything to be feasible in terms of the runway the startup founder has.
Thanks, Tiana. All right, Jana, you're obsessive about details when it comes to these sort of things. Do unit economics feature in your world?
Absolutely. I mean, I think it's very important to understand our margins. It's really also understand our profitability, right? Because if we're a business, we have to have a positive economics. If it's negative economics, then we have to definitely reconsider something. So I think it's really important to understand how much does it cost us to, let's say, to produce a product or to provide a service. Take everything into consideration and also understand our margins. So all of the things is to really understand how also gives you indication how quickly you can grow going forward and whether you have a business model that works or not. So it's definitely very key.
Nicely done. Thank you very much. I'm coming to Helga last. You know that, right? I'm coming over to Chuck now, but I'm leaving the salesperson to the last place. So Chuck, I mean, you tell stories, right? Unit economics feature in storytelling?
Well, it would be yes. I'm not typically a numbers person. But when people come in, we've got to be able to explain how to make these numbers meaningful. So when people I work with folks like you, and they do their costing, they do their analysis, they come up with what economic model is going to work, then I can step in and help them communicate the message either internally or externally. But the heavy lifting happens with you folks first, and so I really don't have much more to add, but certainly have people rely on you to help them through that journey to find, what specifically those the costs and rationale ought to be.
Thanks, Chuck. All right, I'm not sure what's going to happen when I ask Helga this question. So come on, Chief Sales Officer, what do you want to do with unit economics?
Well, first of all, I'd like to point out that I don't think there's a close enough proximity between sales and our beloved finance teams. I think salespeople should really understand unit economics a lot more, and perhaps if they did, they would think twice before they just jump into discounting the minute the customer goes boo. And I think it's very important that they understand how it is that the product or solution or service that they're selling, what are the cost implications, because they need to understand that one thing is cost. Imagine a balance, imagine a scale, okay? You have the scale of price. On the one side of the scale, you have price, and on the other side of the scale, you have value. And so you have to defend, you have to be ready to defend your price because you understand the value that that price represents to that customer. You might be selling a solution that costs 10, you're selling it for 100, but it could be solving a problem of 1 million to your customer. I mean, I'm overreacting here a little bit, but it's just so that you can understand, and the same problem might be worth, 50 to another customer. So it's imperative that if you are in charge of revenue for your company, that you understand what is the price on the one side of the scale and what is the value of that product and service to your customer. And that has implications on discounting. And of course, we don't have time to talk about this, but, Rachel, this sort of thing has implications with forecasting, right? I mean, there's all sorts of forecasting going on here. There's implications on that. And most importantly, this is something for salespeople or, whoever is in charge of receiving commissions for their selling, if maybe there were costs taken out of the commissions. And by the way, this is a practice, right? Rachel, you know what I'm talking about?
You can have step commission depending on how profitable the work is that someone's sold, which I think is a lot of fun.
Not for salespeople.
No, sorry.
But if there was more practice around that, if there were more practices around that, then maybe you'd see behavior adjust accordingly. So costing very, very important.
Yeah, that's true.
I mean, just said here. Sorry, please.
Sorry, I mean, I was just going to say, so one thing I didn't mention before is But yeah, forecasting very much. I mean, all the elements of unit economics are what you should be communicating in your business plan. They are all the things which, you know, all the different levers which will drive how successful your business is financially. So it's
and usually forecasting practices, let's be honest, they're out of date. Because you are measuring, you're chasing the revenue, and what you should be chasing, oh my gosh, please, Rachel, don't kill me for this, right? But instead of chasing the revenue, you should be chasing the activities that lead you to that revenue, because that's where you make the money. You make the money chasing the activities, the good practices, the activities that lead you to that money. So if you need to be doing, if I'll give you an example. You understand that in order to make $10,000, you understand that you need to close 2 deals, but your closing, your conversion rate is 10 or 15 or 20%. I do beg your pardon. And so you need, so regardless of how many deals you close, you know that you need to at least do 5 times that number of meetings so that you can close those deals. So you go after the activity, and then the deals and the 10,000 will, I'm not going to say magically appear, but there's no way you cannot, right? If you're doing the activities and you know your ratios and you know your margins. That's the key. Chase the activity, not the deal itself. That is the secret.
All right, I'm loving this, everybody. And I think one of the most important things we've just exemplified, sorry, Pedro, is if you're a startup and there's 2 or 3 of you, and you maybe don't have experience, you're first-time founders, what you don't have is a board that can sit around and give you these kind of perspectives, right? So we've just gone through 7 different people with the different perspectives. They're all grown adults. They've all done startups before or been in businesses before, some of us for many years. And all these different perspectives of from where they sit in their functions, where their expertise are, this is what unit economics mean to me. Now, if you have a board of these kind of people, you can really think through something like this in the round, right? You can really think about it from all these different angles. But if you don't, that's one of the reasons you might call us, because we can actually help you think it through. But thanks for that. Pedro, sorry, I cut across you. What do you want to add?
I think it's great that you did, because you added a very relevant point. I was just to give a small input. Sometimes the costs we see are just the tip of the iceberg. And I've seen many companies, not just startups, fail because they lack 2 things. One is understanding the real costs that are not seen on the first side, and the second one is not having the team aligned around it, understanding it. One day I had to explain to someone that was on the technical team, why did I have to charge his hour on the specific rate? And after explaining all that, not just reduces the friction within the organization, but people actually started becoming more focused on, for example, reducing some time spent on some activities that were contributing to generate costs but not contributing to increase the production, for example. And sharing these to a certain extent, because we don't expect everyone in the organization to have the same skills and understand everything. But share this as much as you can, because you'll see that everyone in their own jobs, on their own tasks, will try then to manage well, try to manage on a more adequate way the costs they generate or interact with. Sometimes it's just easier, for example, to let's buy instead of try to do. Let's subcontract. Let's stop doing and find a partnership to offer these things like that. Always are maybe good solutions to actually have a more profitable business, more focused on the real goal, and not trying to be all around doing everything and trying then to actually be able to optimize everything. No one can optimize everything, so stay sharp.
Okay. So I'm going to chip in my 2 penneth using my old language and the way I was taught. So everybody cringe when I use the wrong words, especially Rachel. Sorry, I'd be a pseudo accountant for a moment. So The way I was taught it in unit economics, the simple version that I give is buy it for one, sell it for two. The profitability point that Rachel pointed out, like you got to make some money when you're doing things. The way I view things in unit economics is you have revenue. Underneath revenue, you have a thing called gross profit, right? Which is the money you make from each unit that you sell. And sometimes that's referred to in my old world as a contribution to the company. And then below that, you have overheads. And from when you take out the overheads from the contribution, you then have what we call net profit, right? And the best version of a company is one that has a lot of net profit for the revenue that starts at the top. Now, the unit economics are the up and the down, the cost versus the price that enables you to make a bigger contribution. That's the way I was taught anyway. And the way we sometimes break it down inside companies is like, if we think of overheads of things like offices and cars, how many of these things do we have to sell to afford the car? How many of these things do we have to sell to afford the office? And so that's the contribution covering off overheads. And one of the ways, obviously, for sales strategy stuff is how many of these do we need to sell to hit our forecast or our budget or our quota for the time. And so I tend to hear a lot about these unit economics in startup pitches, because what the investor's trying to see is, how does this engine make contribution to the rest of the company? And we assume we're going to have to add overhead at some point, but the units themselves are what makes the money in the first place. Overheads is like how we then decide to spend it proportionally to get net profit out. And in digital startups, you're trying to do a scale at the top with minimal overheads. And so the unit economics are the most fundamentally important piece, because it's like, if I've got a good engine and I can scale it with digital presence, I actually can put a lot of pound notes at the bottom, which is what Google does with digital advertising as an extreme example. So Rachel, how many things did I traverse badly or well in that perspective?
Oh, I think you did well. It was like a nice trip back to the 90s.
Yeah, thank you very much. That's where I live, right? You should see me rave. Yes, absolutely. Okay.
But may I point something out there, because I would like to challenge. I'd like to challenge that, because not the cost side of things, but the revenue, gross profit, or whatever it is. And this is where I think companies today, startups today, have an opportunity to right, I'm not going to say to right wrongs, but to innovate, right? So when you're forecasting and you're just saying, okay, I'm selling 10, I'm selling each unit at $10. I need to sell 10 every month to make that revenue. I mean, that's one way of looking at it. But another way of looking is, what do I need to be doing to reach that sale? So to make those 10 each time, what activity do I need to do? How many cold calls do I need to do? How many emails do I have to send? How many, video messages do I have to send out? How many voicemails? How many LinkedIn invitations? How many meetings do I have to have? What's my conversion ratio to get to those 10? There are literally four little numbers that you should be tracking no matter what. And those numbers are all related to activity. Number one, how many opportunities do you have in your pipeline, right? You cannot live without a healthy pipeline. You cannot sustain your business, right? Unless you just live off references or you're an e-commerce portal. How many opportunities do you have in your pipeline? What is your conversion rate of those opportunities into closed business? What is the value, the average value of each sale? And fourth one, how long does it take you how long does that process take, right? What is your cycle of selling? Those four numbers are everything, in my opinion. But behind those numbers, there are activities. So when you look at your numbers over time, you're thinking, right, I'm tracking these four numbers and my performance is going down, i.e. my gross sales is going down. And that's because either I don't have enough opportunities in my pipeline, or the value of each sale has been going down, or the length of time is taking me to sell is taking longer, or my conversion ratio is worsened. You can easily identify where the key issue is, and then you can adjust your activity accordingly. So if you're looking, for example, for more opportunity, I'm loving that Nick has just nodded, because honestly, if Nick nods, I am on the right track here. But
No, somebody's just asked him if he wants a cup of tea, Helga. That's all that is, right?
Damn it. But if you need more opportunities in your pipeline, then you need a better outbound and inbound alignment. So that's what you do. You don't go out there and you prospect like mental and you're throwing spaghetti at the wall and seeing what sticks. You'd have specific activity with specific purpose. Everything in selling has a purpose behind it. And that's where activity come in. So my big advice here is innovate. Don't be scared and use those traditional methods of, those little old numbers. Think of the activity that leads you to those numbers, and you forecast for that activity, and then you'll get the results.
Do you mind if I
Helga.
just add a couple of sentences, because I love what Helga said. And I think it also comes up to something that is quite difficult to achieve, but it's critical, which is understanding the purchase process. And if you understand the purchase process, then you can actually design the funnel. On the process of doing that, you can redefine real KPIs that will really impact in your sales. And more importantly, be very honest with that. One day I was meeting a customer that their biggest customer was a huge corporation. And they understood after a while that they had 12 levels of decision and they could only reach level 8. So all they could do was push the opportunity until the top of the level 8, and from level 9 to 12, which was the chairman, I think probably the 12th, they just had to wait. And so they knew that after reaching the level 8, they would expect at least 6 months to have an answer. That was the average time for the thing to go up and down the 4 layers. They were not actually have the ability to impact. And then, for example, on a company I used to have, we had 8 products. We had quite clearly measured the decision timing. We had from 15 days maximum to over 6 month minimum on those 8 lines. Okay, so every time we were forecasting, we were understanding, okay, we have X amount of money in opportunities in this line of product, which means we'll have a conversion rate estimated we had, of course, but the decisions will occur X amount in this month, X amount in 2 months, X amount in 3 months. And for example, for this short-term decision process, if they didn't decide on that month, they would the decision would be a no, because they never decided over 2 weeks later than after the proposal. But this takes a bit of time to build, but it's definitely really impactful on your end result. Thank you.
Thanks, Pedro. All right, so second question, I'm going to go to Rachel and Chuck with this first, because I know you just did an awesome how-to episode. So the question is, what kind of metrics should people be considering for a seed round? Okay, and then we'll open out to the wider one when you guys have chipped in. So Rachel first, then Chuck, what's the metrics you would advise at this stage, or your experience in metrics like this?
Oh, goodness. So, yeah, I mean, I think some of it's what we talked about before. So, I mean, for a seed round, you need to be really clear what it is about the business that's going to make money. So, who is the audience? How much of that audience is likely to buy? And, how many do you feel confident you are really solving a problem for in that audience? So you need to really understand what the potential customer base is and what your what your likely conversion rate is, and then I mean this really is all about unit economics, of course, because then we dive back to what activity is it going to take you to get to that audience, and what does that mean in terms of your costs. So I think seed investors are very much looking for over and above the story of what's happening. They are looking at understanding that there is a need, that this is something that's not already being solved in the market, and what does that actually mean financially in terms of the risks and the rewards. And so being able to articulate potential costs really well, how much work is going to be involved, and the timelines in getting to where you're saying you're going to get. They need to see evidence that you're being realistic about that. So I think that's the point I hand over to Chuck, I think.
let me unmute. It's so much better than you trying to read my lips. I think it's what we talked about the other day. You have to do all of this research and get the right numbers. You need to find the numbers that are really going to support what it is that you need. It has to be realistic. You can't come across as being delusional. But the really important part of all this, I see people who have the right numbers. They just haven't been able to communicate it well. They, as we talked the other day, the numbers in themselves are meaningless. What is important is the consequences of those numbers. So you've got to give your numbers, a tether to the problem you're solving, and you need to make the numbers meaningful. You have to make them impactful. I see things. I see sometimes numbers presented on a table, and tables really have no emotional, visceral impact. It's very hard to to try to get the full meaning from a table. So in a lot of ways, when we get these numbers, let's also not only make them meaningful, but let us provide them in a way that people immediately look at it and see the aha. A 2 and an 8 as numbers sitting side by side, they're just numbers, and you don't get the impact of the difference in size. But if you had a column that was 2 units high versus a column that is 8 units high, immediately you see graphically and emotionally and viscerally the impact of this. So I think to kind of summarize, it has to be realistic. It has to have a tether to the message that you're trying to communicate, and you have to show what is the impact of this. You've got to present numbers so they're meaningful, and so that you can see even graphically that this is bigger than that. So it is the numbers, but it's also giving meaning to the numbers, is I think what I would stress.
Thanks, Chuck. I'll just turn to Tiana and then Jana, just see what your perspective is. I know you get involved in different raises. So what's the metrics that you would maybe give your perspective on for seed rounds?
Not sure if I can state the metric, but when we are doing a pitch and we are presenting the ways as product people from our side, how we would survey the potential customers, how we would scope the MVP to be able to validate the idea, etc., etc. There are 2 different situations that we mainly have. One is when you're talking to potential customers, where we are trying to convince them that our solution is indeed going to solve the problem and in a way that they would like to pay for it. And it's kind of a direct connection because they do feel the edge that we are offering scratch, right? But when we are talking to the investors, it's in a way indirect. We're trying to convince them that we will actually solve the potential customer's problem in a way that that customer would probably like to pay for it and pay enough so that that investor will have the return on their investment. But in the same time, the potential investor is not feeling the edge the potential customer is feeling. So the connection is not that direct. So we have more difficult time presenting the ways we plan to validate the idea. And we need to do it in a really good way, not only listing the value propositions and the way how we're going to convey it in our MVP and how we're going to validate it with as least cost as possible, but also we need to list the doubts and how we are planning to clear those doubts as soon as possible before the investment go too far and potentially in vain. So I would say those are the things that we are trying to emphasize when we are presenting the product roadmap.
Thanks, Jana. Awesome. All right, Jana, what do you do with this one?
I think it's all about, I completely agree with a lot of things that has been said about this topic. However, I'm very practical. So I know when we speak with investors, they want to see numbers, and we need to know our numbers, right? So we need to showcase what is our, let's say, what is our revenue per month? So recurring revenue, what is our growth rate? what is our current, how does our current cost structure looks like, what is our burn rate, what is our churn rate, what is our customer acquisition cost. So all these numbers, you have to know them. And when the investor will ask you this, you have to justify, right? So these are some of the metrics, in my opinion, that you should definitely pay attention to and have it in your slide deck. Of course, depends in which, if you're just raising without, like if it's your first round, but if it's your second or third, then you need to definitely have this this matrix included. I would say that would be my best advice.
Yeah, I agree with that. I say one of the things that I think can be quite hard to articulate is people do need to show that they understand the impact of scaling up on the costs, because not all expenses scale up linearly. And it can be, you know, quite an art to really understand, you know, what does something mean if you're stepping up your production by 10 times. You know, and yeah, as you say, being able to properly understand and explain those numbers and how you've arrived at them is really important.
Thanks, Rachel. All right, let's turn to the CMO in residence and see where we get to with these kind of metrics.
No, I mean, I think a lot of it's been said, so I don't want to repeat everything people have already said. I think I would say, if you're going to put numbers, make sure you understand them, first of all, which is surprisingly how often people don't understand the numbers they actually put up there. And keep them as the minimum number of numbers, if that makes sense, that you can have on the spreadsheet, because people like numbers, but they don't like too many. They have to be impactful. They can't be confusing. They can't be distracting. So that, and I think it goes back to Chuck's point about, remember what your message is. The numbers are there to support your overall message, and they need to actually to support that. And just the final thing, go back to what Rachel was just saying. I think it's and it goes back to the unit economics thing, which is actually a lot of the time, particularly if you're in a SaaS business, you're actually going to be creating a lot of customers and spending a lot of money before you ever get a return. So you've really got to understand your burn rate and where, at what point in the cycle you're going to start making money. And you know, as Jana says, your acquisition, speed of acquisition, and hopefully minimum churn is going to be the difference between success and failure. And investors know that. And if you can't articulate that, they'll soon find you out.
Thank you, Nick. Okay, back to the sales area. What sort of metrics do you think about, Helga, when it comes to seed raises?
I am absolutely loving everything that the rest of the panelists said. I'm sitting well in the middle between Rachel and Chuck as well. I really love a couple of things that they said, and Nick has kind of made some really good points here as well, and Tiana and Jana. Wouldn't it be wonderful if we could calculate, if there was a metric that said, this is the size of the problem that I solve. And I'm telling my story in how I solve that problem in a differentiated way that resonates with this audience, that audience, and that audience. Because, of course, if this was easy, you know, businesses would be living different realities. And one of the reasons why this is difficult is because whatever it is that you're selling, that is going to have a value to stakeholder A that's going to be different to stakeholder B. And this is just inside the same company, right? So you're trying to make a sale, but you're selling to different stakeholders, reaching a consensus between them, and then ultimately making a sale. But this is to say this. Typically when I hear startups talking, and especially when they talk about numbers, to me, there is one thing missing, which is the size of the problem that they are specifically solving. I don't think that this is something that you say in this way. Look, there are 500,000 children dying of malaria each year. And so I created a vaccine that's going to solve that. Come on. That could be the size of the overall problem, but that's not how much is there for you to grab, right? You need to understand who it is that you're solving your problem to. And this is taking me back to the point that Rachel made right at the beginning. She said, what is the potential audience? Who is your client, right? Because if your vaccine is solving a problem for one part of a business and solving it is going to be, you know, 1/10 of the overall problem, then why on earth are you talking about 500,000 children dying each day? Because that's not what you're doing. That's not the impact that your business is making. So understand, and this goes back to the storytelling, understand what is the size of the problem that you're specifically selling in a differentiated way, and then you will have the true value of the market that's out there for grabs. And that's something, especially if you can corroborate that with evidence, then it's something that an investor can really be behind. So I would really say, think about the metrics that are about you, and then think about the metrics that are not about you, but about your client. Because at the end of the day, you still need to sell a product to them, and you need to understand what that's worth to them. So startups often talk about, this is important, this is important, this is important. What I do is important. It's important to you, but you need this thing called empathy. And this is what sales is about. Sales is about empathy and understanding this is important to you, but you know what is on your client's radar and how important it is to them. If you can translate that into numbers, then, and if you can evidence that, then you are really talking of more of a reality that's achievable, and that's something that can excite investors a lot more.
Look at us, all these different perspectives today. This is very cool. Let's come to the CEO in residence. What do you do with metrics around the seed raise, my man?
Well, not much that hasn't been said yet, so try to add. So it's summarizing a bit everything everyone already told. I think you have to demonstrate two things. One, you understand really the opportunity that you're trying to convince others exists. And the second part is that you have the ability to actually deliver a scalable solution. So that implies numbers, okay, some metrics to demonstrate those two things, that you understand the problem and you are able to deliver a solution and it's scalable. Finally, if you are on the round, probably you are asking something, money, indeed. So define well the amount of money you want. That's another relevant decision to take. Not just the valuation, but the money itself. Think about the runway. Then you have to demonstrate by numbers what do you have, what do you bring, including your magic, powers that will give you the ability to actually deliver that scalable solution. And then how are you going to use the money? That's something super relevant for the investors, because I want, as Mr. Wonderful says at Shark Tank, I want to know where my greenies are. And I want them to come back to daddy or something like that. That is always says. So people tend to think about CapEx and OpEx, but explain where and why, because it's not irrelevant for investor. It may be interested in giving you, investing that an X amount of money in your company. It's exactly what you are asking, but the business may never end up occurring because it disagrees on the way you plan to spend the money, because it thinks it's not the best way to multiply it or to protect his investment or her investment in general. And that's it.
Thanks, buddy. All right, well, I'll take a trip to the 1990s again and see what everybody thinks. So when I saw this question, I thought I would go with the kind of startups that I see a lot every day, particularly digital, web, and mobile kind of startups. And there are three particular metrics that which we focus at a lot. The first one is the cost to acquire the customer metric, and looking at like the things that go into getting that customer to sign up and be part of the process we want them in from the beginning. And then we look at the lifetime value and often a staircase of things to create lifetime value with that customer. So how long they're going to be with us and what they're going to spend with us over that time, and how we kind of step them up through different phases of the proposition over that time. And then it's the ratio between those two, the ratio of how much it costs to acquire them versus the value we're going to extract from that relationship over time. And then the third metric that we dwell on quite a lot is what I call the referral rate. Some people used to call the virality coefficient or the K coefficient. And that's because it's the most organic way of growing base. And so it's the equivalent of if one person signs up, how many people do they recommend? Like, and the net promoter score question being, on the basis of your experience to date, how likely are you to recommend me to a friend or colleague, kind of thing. And then we look at, and a great example actually is a Portuguese startup called Sparkle, and they had a really good metric on this one. So they discovered early on, and they've changed a lot since, but you know, every time they put €1 into a Facebook ad, they got an €11 booking for somebody to get their nails done at home. And when they put €2 in, they got two €11 bookings, but every time they had 2 bookings, they got 1 rebooking. So they had this understanding that 2 new customers actually equaled 3 bookings, and now they could consistently put €2 in and get €33 out, and it became a bit of an engine for growth. So those are the 3 metrics I thought about straight away when this question came up. How am I doing in my 1990 style, Rachel?
I think that was pretty classic unit economics, actually.
Oh God!
So
really?
I think you've updated yourself a little bit, yeah.
Okay, I'm now in the 2000s, or I don't know. We'll
Yeah,
see
I
where
think
end
so.
up. It's good being this old sometimes, right? I can pick my age group for today. All right, third question, going out there to Nick Eversett to start off with. How do you market a website with no budget, buddy? What would you do with this one?
Yeah, you don't. Okay, that was easy. No, I mean, actually, I think there's an awful lot you can do. I mean, just taking actually, I think a live example is actually I'm gonna go in house really is Canopy Coaching, and how I think where I would start is you gotta if you want to receive something, think about giving something. Just don't assume that a website is there and people are just going to come to it. You are still the business owner, the business founder. You are the ambassador. You are the main salesperson for this organization. The website is there to support what the business does. So in terms of, if you've got no budget, well, what can you do? You can actually offer things. You can offer to help people. You can give people advice, coaching. We do, for example, on the Canopy Coaching, we're very keen to offer people some free coaching advice. You can have a virtual coffee. You can come and talk to somebody, any one of our coaches, for nothing, and you can probably get some nuggets of benefit from them before you even actually have to do anything further. I mean, that the stuff we do, for example, in the residence, the how-tos that we are actually doing every month are a good example of something where you can actually offer something and promote what you do at the same time. Even the things like the demo nights and we've done in the past Founder Fridays, so you can actually listen to a founder's story, and these are all opportunities for you to actually engage with the audience, and don't necessarily cost you anything more than your time. So that would be one observation, and certainly another one would be think about what you've got to have real clarity about what your business is about, who your customers are, who the people you need to actually facilitate. Because actually, what you'll find is there's a lot of people out there who are quite keen for you to succeed. You have friends, you have colleagues, you have other people within the industry. Make sure you build your networks, because those are the people who are going to be, if they're not your first customers, they're going to be people who are going to refer you your first customer. And that doesn't necessarily cost any more than your time. So you can build your personal networks, online networks. LinkedIn's often very good for that. You can actually, there will be industry specific groups that would be valuable to join. You can become possibly a thought leader in those organizations. I know many people who've actually built up their expertise, and then they go and talk at conferences. A great way to actually showcase your talent and value. So just a few ideas to kick the discussion off.
You didn't mention Google AdWords once, right, Nick? Is there a way you can get free Google ads, or like how does that work?
Actually, you can. Well, you don't get free Google ads. You can get, I think, some 400 quid's worth if you spend 400 quid. So you can get some extra value from that if you've got a bit of budget to spend on Google Ads. That's for sure. Yeah, but I don't think they give anything away for nothing. Sadly, not last time I looked. But
Thanks for that. Tiana's showing the value and the etiquette of this forum now by raising her hand rather than just jumping all over the conversation. What do you want to do with this one, Tiana? How do you market
Yeah, I
something
just
for free?
wanted to share a tip that worked for me. If you don't have the resources to drive traffic to your own website, which is not easy, you can contribute to the websites that already have a lot of traffic. So, for example, personally, I've done a lot of guest blog posts, guest articles on the other people's website of the companies that have some businesses that are related to my field of work, and it works really well. I think that content marketing is in my opinion, the most fair form of marketing, because you actually share some value before you expect to receive anything, like Nick also mentioned. And this is pretty easy. And many websites are actually, website owners, administrators are actually happy to post a guest article in their blog if it's in the field that resonates with the target audience. And then you can always have call for action and a link to your own website at the bottom, somewhere in the description of the autobiography, etc. And it really works. And apart from that, there are platforms like Medium, where they care about the transparency and driving traffic to your content. And again, you can have call for action. And they actually landed clients, paying clients, by writing blog posts on Medium. And this is really cool, and I think a very fair way, because you give some value for free before you expect anything in return.
Nice, thank you very much. I'm going to go to Rachel and then Chuck and then Jana, please. Rachel, anything you can share from your own experience?
I'm not sure I can add a huge amount, which is why I hadn't raised my hand, but I agree very much with the get other people to post content for you to drive traffic to you. I think, yeah, I've done that on rare occasions, but when I have, it's worked exceptionally well. And there was, one post I did for another website which got shared. I'm still getting new referrals from the client that we got, who was the first one who saw that blog post. So absolutely. And then, I was going to say the networking as well. Just get out there and tell people what you're doing. I think Pedro said before, just practice talking to people and articulating, why you're special, why what you're doing is special. And all that networking is also really good practice for when you do get into the pitching for investments, so that you then do have money to spend on Google AdWords, if that's your dream.
Thank you for that, Rachel. Chuckles, what have you got?
Well, it's obviously we need a web presence just for credibility, but don't worry about making something that is robust. All you want to do is whet people's appetite, maybe come across with one or two important messages, and then a way to get in touch. Make it simple and elegant. Make something small, but make it small and good, because it's going to communicate two things. One, some basic information about you, and also it's going to communicate a persona, an image. And you want to make sure that it comes across in a way that elevates you. Just keep the message simple, and have it simply drive this idea of, okay, I get it. I like what I see. Now tell me more.
Thanks, Chuck. All right, and you have a very effective web presence with the Roundtable site, particularly, right? And it really follows that pattern. It's great. I think you got a Roundtable today, right? Or you're not missing it now, are you?
No, it starts in about 6 minutes, and I'll jump off, and it's open to anyone in this community. It's chucksroundtable.com. Simple as that.
You'd even let us come? Are you serious? Like, it's an open invite? Come on.
Yeah, well, I'm feeling very generous right now. So it's a wonderful community, and we have had just so many connections and resources, and so anyone in the Canopy world is sort of welcome at our portals.
Thank you very much, Chuck. All right, Jana, then Helga, and then we're going to draw to a close. 3 questions in an hour. My goodness, panel, come on.
Okay, so in regards to the website, I think one thing that I will emphasize what Chuck just said, in terms of to be clear again, what you're providing, how you're providing, and why you're providing it. So you're using the golden circle, like what, how, why. And if you structure your landing page as clear as this, it will be so easy for the person to really understand what your product is about or what your service. Then another thing you can do is SEO optimization of your website. I think that's very key. And nevertheless, I think content is king. If you make content that really adds value to you, that you learn, that your customer learns something, I think that immediately creates this curiosity, and again this call to action. Okay, I want to know more. Like, how can you help me to get to where I need to be? For instance, if you are raising a seed round, okay, so your thing should be, okay, I can help you to excel or to get your next investment, right? How do you do it? Well, by having coaching sessions with me. And then why do I do it? Because, well, I'm super passionate to help startups, right? So if you have a landing page that is super specified on what you are providing, I think that's a very, very big success. And again, content is king. If you can, as Tiana said, if you can share your additional content and help other organizations and provide some value to them, I think that really helps a lot. And of course, what is required from you is the time. At least in the beginning, that's the time.
Thanks, Jana. Helga, finish off this one.
And consistency. Be consistent, right, Jana?
Absolutely.
I know that consistency is going to be a big word in also Nick's vocabulary, right, Nick? Because if you do it once, then thank you, Stuart. I think, I mean, Nick's said a couple of like diamond gems in it. I personally, first and foremost, I think to answer this question, we really need to understand the person that's asked this, whether they're talking about whether their business is B2C or B2B or both. Because a website is hugely different. The function of a website is hugely different on a B2C business than what it is on a B2B business. That's first and foremost. But let's just assume, for argument's sake, that we've got both. So you're selling to both the end client and to other businesses. Nick mentioned something in the sense of just really communicating your speciality. Sorry, I'm thinking in Portuguese now, but being an expert. Your audience needs to understand that you are an expert in what you do, i.e. in how you solve their problems and what those problems are. So many times I go to a website and everybody is throwing me fancy words, and I read, go all the way to the end, and I don't know what that company does. You're trying to be too fancy, and I don't understand what you do for me. So you don't know me. You can't possibly know me. I can't possibly have that confidence in your business, or at least understand how different you are from the alternatives. And by the way, fellas, there's always alternatives, okay? You can't say you're the only one doing this or the other. Your customers are not living off the air. You are probably not the next Amazon or Facebook or Google, probably. So you don't do everything for everyone. And I need to go into a website and understand what it is that you do for me. Speak to me in a way that helps, that shows me that you understand me. That's going back to Rachel's point when she said, and Jana's, when she said, why are you special? And by the way, you're not special because of who you are. You're special because of what you do for your client. So when you demonstrate your expertise, you can get invited to contribute to specialty white papers, to talk at events. You can build your own event. You can do an event on LinkedIn. I don't think that costs anything, right? Because we're talking about not costing anything. So you can start to build a community, and Chuck is an incredible example of this. You can start to build a community by just doing these events where you're sharing your expertise and you're becoming a special matter expert in the field that, by the way, you have a solution for, right, to solve those problems. So be part of these events, create your own events, speak at these events, but go to where your client is. So if your client is, if your audience is not on Facebook and it's on TikTok, go to TikTok. Right? I don't even know what I'm saying right there. I just fancied saying TikTok. We should have a game where during this session we get to say one word that has nothing to do with anything. But go to where your customers are, right? And speak there. Show your expert matter expertise there. And just one last thing from me, which is we're all talking about show your value and understand your client. I challenge this group to one day for us to discuss exactly, and for us to talk and share our views to our listeners, exactly what it is value. Because you out there listening to us, you might be thinking, gosh, what do they mean by value? What do they mean by knowing your client? We should be discussing that, because that is the beginning of everything. Everything that we talk about always goes back to those two things. We should have the opportunity to discuss and help people understanding exactly what that means.
Sounds like you've got the first question for the next AMA. Thanks, Helga. I like that one. Good seeding. So we're going to draw to a close now. We've run out of time. Thank you to all of the panel that have been here today. We will be gathered again together next week for demo night. It's on Wednesday, and we're going to be in a new place next week. We're going to be on Webinar Jam doing our live streaming. And then, of course, for those of us that are very excited about March, it's the in-person demo night in Lisbon with 7 investors doing reverse pitches, and everybody that's coming along in person. That'll be wonderful. We will do our very best to do a hybrid event on the evening as well, so it will be streamed live. But tonight, everybody, that's been wonderful. Thank you. 3 questions in an hour, a new metric for us, 20 minutes a pop. Let's see where we can go next time. I salute you with one of these as always, and I shall see you next time. Thanks, everybody.
Yeah.